So today I'm going to talk about how you can actually trade with a small account balance and exponentially grow that. We're going to use £10 as an example just for today. I get a lot of messages on my Instagram asking me how to actually trade if you've only got a little bit of money or a small account balance. So I thought I'd make this video to help you all out. The first couple of trades you actually do on your account are very crucial to get right. Of course, you've got to use very small lot sizes as well, so I'd recommend only using 0.01 lot sizes to start out. So for example, if your trade has a 30 pip stop loss and it actually ends up hitting the stop loss, you'll only lose about £2 to £3 per trade. And this means you've only got around 3 or 4 opportunities to actually grow the account without blowing it. So you need to be very selective with your first couple of trades, otherwise you could end up losing your £10 investment straight off the bat. And if you do actually end up winning your first couple of trades, you'll end up growing the account to about £20, maybe £30, but you'll only actually be able to trade this amount of capital if you use high leverage. I'd recommend a 1 to 500 leverage, and if your broker doesn't offer that, then I'll leave a link down in the description to my broker that I'm affiliated with. You can sign up for an account with them and your leverage will be sorted out. The next thing I want to say is don't trade volatile pairs. So by this I mean don't trade gold, don't trade US30, don't trade any of the JPY pairs. All of these pairs move a few hundred pips a day, so I'd recommend staying away from them with your first couple of trades. This is because if you're actually on the wrong side of the trade, you could end up losing a lot more money than say £2 or £3. You could end up straight blowing your account already. Now, volatile pairs are great to trade, but I'd recommend you wait till you've got a bigger account balance to start trading them, so you can factor in your stop loss potentially losing a larger amount of money. When you grow your account balance to £50, £100 or more, you can actually start trading the likes of gold and the JPY pairs and US30, but for now I'd say stay clear of them. Now, starting off with a small account balance, you should always use the same size lot sizes. So as I said earlier, 0.01 is ideal really. Until you actually build up 3 figures or more, you should only be using 0.01 lot sizes. After that you can use 0.02, 0.03, etc. but not until you've built up a solid 3-figure balance. This is due to potentially over leveraging the account, and also your margin won't be big enough to actually trade big lot sizes. If you're using stop losses that are 25 or 30 pips per trade, you will only be losing £2.50, £3, and on a £10 account balance, that's 30% of your actual account. In an ideal world, you only want to be risking 1 to 3% per trade, maybe even 5%, and on a £100 account, that's where you should really be using 0.01 lot sizes, maybe 0.02, but you get the point of risking 1 to 3%. Obviously, you can't risk 1 to 3% of your account balance with £10. So you were actually going to have to risk more. Even if it were possible to risk 1 to 3% of your account balance, you would be making pennies, so there'd be no point really trading them. The next thing I wanted to talk about is if you end up going on a winning streak, so say you win 3, 4, 5 trades in a row, don't start increasing your lot sizes and thinking you're already a professional trader. Don't be arrogant, just use the same lot sizes that you've already been using. Because if you actually start using bigger lot sizes, you'll end up back to square one and you'll have lost all the money that you've already profited. And all your wins will be cancelled out by one big loss. Following on from this, you should never revenge trade. This may happen after a losing streak that you've had. You might think to yourself, if you use double the lot size, that you'll make double the amount of money, so therefore you'll end up winning back the money that you've lost. But in reality, you'll soon realise that this is not the case, and the market will end up going against you and you'll be losing more money than you originally started with. Essentially, your emotions will end up getting the better of you. Before you know it, your account will be blown. I also want to say that when trading, you need to make sure that you're using a good risk to reward ratio. Anything above 1 to 1 is ideal, but realistically you want to be using 1 to 2, 1 to 3, or 1 to 4. I personally like using 1 to 3 or 1 to 4 because it works pretty well when swing trading. What does risk to reward ratio even mean? So say that you have a 1 to 3 risk to reward ratio and your trade is 30 pips stop loss. This means your take profit is at 90 pips. So all you're doing is risking 30 pips to gain 90 pips. That's why it's so crucial to make sure that you let your winning trades run to the final take profit. The last thing I actually wanted to say is when you start trading, it's best to actually save a good amount of money so that you can actually properly invest in trading instead of just depositing £10 at a time and risk losing £10 each time from a couple of trades. You should save up your money initially and learn how to trade properly. You should start on a demo account and backtest your strategy to make sure that you've got full confidence when starting to trade properly. Once you've saved up enough enough money to start trading, maybe it's a couple £100 or maybe it's £1,000, you'll then be able to move on to get your psychology and mindset in the right frame so that you'll have everything you need to become a successful trader. So I hope you enjoyed this video on how to actually build a small account balance, and yeah, I will see you in the next video.